Hi traders, and welcome to the Technical Analysis Market Rep on the 13th of November. So we've seen the market really return to what it was doing prior to the election now. Like, we've had the big news out of the way. We've got the a vaccine release that happened last week as well, which really sent the markets off on a little bit of a run, but they really have maintained their nice zone. So we'll jump straight into the markets and have a look what we can identify for today's trading and into early next week. So the first one we'll have a look at is the Aussie USD. On a daily chart here, we can see that the lines we've drawn up have held up pretty strongly. You can see we've had a bit of a week of indecision around these highs. These previous highs that are around that sort of 73 cents has really pulled it up. You can see the last three candles in particular have all been indecisive candles. They've been trying to push through, failed, and this last one has shown the weakness that we're looking for. So it was a pretty good level to be shorting off. Now, I'll go to a smaller time frame, and you'll start to see a few different patterns emerging. On the 4-hour chart, you can see that there was a head and shoulders pattern here. Not the best you'll ever see, but it was a head and shoulders nonetheless, and it certainly did break through, came back and retested it on this candle here, and then sold off. So, look, it certainly showed the signs of weakness, and when you get this sort of pattern at a point of resistance, it's a pretty good sign. Now, the 4-hour is below the 20 moving average, so yeah, there's no real reason to believe that it may not keep falling. A little bit of resistance here was formed, so yeah, it's probably going to provide a little bit of support. You can see the 50 moving average is also pulling it up, but I wouldn't expect that it's probably going to hold up really strongly here. I think that getting down to that 71.50 is probably the real key zone for this one. You can see there's a lot of strong resistance at this point here, so it's a logical target for it to go to. But again, if you are just going for the short scalps, yeah, you want to be probably aiming for maybe only the 72 cents in the first instance, or probably breaking even. MACD is definitely weak here, so you can see that it's certainly going down, and yeah, not far off entering the negative territory below the zero. So yeah, look for shorts on this one. If you're not in it already, maybe just wait for a pullback to the 20 moving average on the 4-hour. You can go to the 1-hour and probably trade it a little bit more easily for the scalp. You can see that it's making a series of lower highs and lower lows, which is good. And basically, we're still aiming for the same zone, of course. So wait for a pullback to the 20 if you haven't entered it already, and then maybe look for the short to try and get it down to the 71.50 or the 72 cents. But I think that's probably the way to play this one. If it does reverse and start to go long, the 73 cents is providing a very, very strong resistance point. So it's going to take a little bit of power to break through that one. So we'll move on now to the US dollar CAD. We'll go to a bigger time frame first to have a bit of a look at what is happening on this one. A very, very strong week, as you can see. This candle here provided the, this was on the vaccine result announcement earlier in the week. So you can see that we had a big sell-off initially, but then really pulled back and came up to the 130 level, which was a very, very important zone for it. And most importantly, closed above it. So all of that price action that the sellers tried to push into this one really was negated straight up, straight on the same day, really. And it's been nothing but buying since. I think it's been a really good trade. I know a lot of people have got in on this one, which is great. The 4-hour one's just been tracking up pretty straightforward. No even pullback really. Once it broke through and got above that 130 again, it just didn't even come back. So yeah, the 1-hour is the clue. When you're not getting pullbacks on the 20 on a 4-hour, you need to go to that one time frame lower to get your opportunities, and you can see they all provided themselves here. So this is the level that we're talking about, and you can see that once it started to rise, it started to make a series of higher highs and higher lows. Every time it came back and touched a 20 was a sign to get in, all right? So basically, we were aiming for the 131 in the first instance. It got there in the first big move, the big impulsive move. It came back, tested the 20 again, and now it's pushed up and, you know, basically broken the 131, came back and tested it from above, and now it's really trying to push up above the 131.50. If it does that, 132 is probably going to be its next target, and it's going to probably do it fairly quickly too. So it's definitely got it in it. When you go to the bigger time frames, there is the room there for it to reach it. I'll show you that in a second. But like I say, when you if you haven't entered a trade and you really want to jump in, just keep going down through to the time frames until you see one that is actually pulling back in the correct manner. So you can see here, as it's pulling back to the 20, they're your entry points, and then you can join into that trend as long as there's enough room up the top end. Now, by that I mean the you can see here that we've got a little bit of resistance at around that 31.50. You can see that the support line through here, all of these touches, provided a pretty reasonable level of support, which you would expect is going to be a bit of resistance now. And you can see the 20 moving average on the daily, which I know is a very significant moving average, is in your face. So we have to break this one down before it starts pushing up to the 132s. But it's going to have to do it. So what we need to see now is price action close above that on a daily candle. Failing that, if it does pull back again to the 131, it's probably going to give you another good reload opportunity to look to take it long again, in the very least up to the 20 moving average there. But you got to go to the smaller time frames to isolate the trades on this one. So once again, a pullback to the 131 will give us an opportunity to maybe get this one long again. That will coincide with a 20 moving average, what's been going up all the way through. And you'll basically get a reasonable move straight up to the 20 again. Once that 20 breaks, our next target is going to be the 132. So we'll move on now to the US dollar Swissy. No surprises here to see this one bounce off this level as well. We talked about this last week, and that was the beautiful thing about watching the market behave itself during the tumultuous time, because when it found itself at those key levels, it provided a pretty good trading opportunity straight up this week. So these have been really, really good trades. Hopefully you were able to get involved in this one as well. You can see it's a pretty big move, not as aggressive or probably as smooth as the CAD's one, but if you go to the smaller time frames, you've got to go probably to a 1 hour to actually see it happen and unfold. It was one big impulsive move, and then it started to grind on up. It hasn't been the best trade, and I think look, it's providing it looked like a bit of a double bottom here on the 1 hour at a place of a little bit of support. So it could do it, but it's got to get above these moving averages now. Probably your target's going to be around that, probably 90, maybe nearly 92, just a little bit below the 92. Is your target. That'll play out the head and the double bottom pattern, from the neckline up to that. That'll play that pattern out perfectly if it does close above the neckline. So you're looking for a close above the neckline and then target that just a tick under the 92. Not a big trade. It's only a scalp, but it is there. But that's probably all you want from this one. There's plenty of stochastic power helping it move from this level here. So yeah, definitely a possibility. But you do want to see that close on the 1 hour above both moving averages there, as long as it doesn't close too far above it, and then just be aiming for around that 91.90 area, and that'll get you through for a scalp on this one. Probably failing that, it needs to do a little bit of work to short for mine. It's got to basically make a series of lower highs and lower lows and close below a key moving average. So, you can see here on the 4 hour, you got a lot of moving averages propping it up. So it's got a fair bit of work to do to break these down. And it would need to break all of these moving averages with a close on a 4 hour to convince me that it's going to go short in the shorter to medium term. So the long is definitely the play here. And you can see the same pattern that we're seeing on the 1 hour is playing really nicely on the 4 hour. You can see that the 20 moving average is being a good support level for it, and it wants to bounce off it. So we're aiming for the 91.92 level there, and basically take a long into that. But waiting for the confirmation is definitely key on this one. Got a very clear target to aim for, so just wait for that confirmation on the smaller time frame and see how we go breaking that neckline on the double bottom. All right, we'll move on to the dollar index, the all-important dollar index at the moment. This provided us with the pattern that really started the ball rolling here. Like, this has been a very key zone for it. We've talked about it several times now. The 92 has been very, very key. It gave us that really nice hammer candle at this point here that started the trend up. This time we got a bullish engulfing candle, a beautiful bullish engulfing candle pattern that launched this one up. And although it has hit the 20 moving average now, and look, we know it's going to be a little bit of resistance here for it. So it's got a little bit of work to do. It needs to break this 20, and that's the only way it's going to convince us that it is going to go long. The obvious target is where we've got this black line drawn here, which is the 93.50 level. That's the first real target for it, and that's the first place it's going to find some pretty serious resistance in front of it. But really, I would be expecting that this one's going to hit the 94 again if it does break above this 20. So we're looking for above the 20 break on a daily candle. And if it does that, we can set our take profits for the 94 level. 93.50 is probably where we're going to break even, because that's going to be the first place that we're going to find a little bit of trouble. But yeah, definitely a 94 is in our sights if we get that close above the 20. So keep an eye on this one. We've got plenty of stochastic power. MACD looks like the signal line's about to exit the histogram again. which is a really, really good sign. So showing a lot of strength, this one. We'll keep an eye on it, set your alerts, or just keep an eye on this 20 moving average. If we break above there, it should be happy days. So we'll move on now to the Euro USD. This one's been an interesting one. We've got it did maintain its range, which was really good. It tested the 119 again, and this has just been a fantastic trade for the range. Like, it's been really, really good for opportunities to go long from around that 117 and short from the 119. You can see we've got a big bearish engulfing candle right at the level that the 119 was previously. So that resistance there provided the pattern. No surprise there. Obviously, it's the inverse of the dollar index. So you can see it's a big bearish engulfing candle versus the bullish engulfing candle that we saw on the dollar index. But yeah, this one's a more probably tradable instrument because obviously the spreads are tighter and people are a lot more familiar with it. So, it's come down and sold to the 20 on the daily, which is a pretty expected move. The 118 has pulled it up, but it is kind of in the middle of nowhere now. Like, it wants to, it's going to fluctuate between the range of 119 and 117 until it gets clear direction. So it should be able to give us some pretty good trading opportunities. We need to go to the smaller timeframes to isolate them, though. You can see here that on the 4 hour, it's sold off there. We've got a series of lower highs and lower lows, providing that this doesn't actually make a new high here on the 4 hour chart, and we do get a break around the 117.50 area. I think that is the cue to actually short this down to the 117 and push it down to the lower boundary of this range again. I know it's a little bit of waiting and you think you're giving away a fair bit of pips. If you want to be a little bit more aggressive, you can probably go to the 1 hour chart and look for a smaller time frame break. But for mine, this is one of those ones that is still in scalping mode. You're aiming between two big boundaries, and if you're taking 50 pips on it each time, your stop losses are generally going to be about 25 because of the way the higher highs and higher lows and lower highs and lower lows are working on it anyway. So you're still going to get a 2-to-1 reward on it. On the 1 hour, you can see that the moving averages are propping it up. So it tends to look like it wants to go up from here. But again, we're going to let price dictate. We're not going to have a guess because it can go either way with no real surprise. So we'll let price dictate what it does. And when we get the series of lower highs and lower lows on, say, a 1 hour time frame, we will go in that direction, either to the 117 or to the 119. So just keep an eye on this one and trade it in the way it breaks through. All right, so the last one we'll have a look at today is the US 500. This has provided, a fairly big move this week, actually. You can see where the vaccine announcement came out, really pushed the market hard. But I did take notice, though, that it was really on the same day that it actually pulled back nearly to where it started prior to the announcement coming out. So, and we've seen a lot of indecision since, really. Like, we've seen the doji candle here, a bit of a positive candle, and now that's reversed everything today, and you can see that it's actually trying to push a little bit down. It's obviously at very strong resistance. There's no surprises there. So how we play this is probably to the moving averages. I think it's starting to behave itself in a way where you can definitely trade it, but you're aiming probably for the key zone. So the 20 moving average is obviously the logical target. That's around 80 points away. To get to that moving average, you need to go to a smaller time frame to actually get the entry. You probably can go to a 1 hour here. So we've got a series of lower highs and lower lows on the 1 hour. So I'm thinking that you can trade down as the moving averages start to come down with it. So if price pulls back up to the moving averages, you can look at selling this one down and trying to get to that 34 sort of 50 area. It's a reasonable move. Like, you're gonna, you got to treat it as a bit of a scalp. I'm still not convinced there's any real direction here in the near term. So you're better off just scalping it and taking the short and sharp stabs, and it's going to give you some really good opportunities anyway. So look for the key zones. Remember what we always say: if the market's a little bit confused, it's going to gravitate to those very key zones. So mark out your key zones and aim for those ones. Use price action, lower high and lower low, and higher high and higher low movements to dictate when the short-term trend moves, and aim for those key zones because they're the ones that it's going to gravitate to until it gets a real market certainty direction. So in this one, again, it looks like it's shorter more than long. So the 34.50 area is the way to go. Failing that, if it starts to strengthen up and starts to make a series of higher highs and higher lows instead, the obvious target is going to be the previous highs. Okay, so you're going to look for probably the the 36 sort of 50 area, probably just below that, because that was an overextended move. So you can definitely try to push it up, you know, another 80 to 100 pips. The 3600 is probably the most likely target. That's what I'd be going for if I was going long. But, you know, when it's so close to resistance, I think I'd rather go for the easier trade. And the easier trade here would be down to the 20 on a daily moving average, which is around that 34.50. All right, so I hope everybody's had a great week's trading. I think we've had some really good opportunities. Those key levels that we talked about last week have held up and produced some pretty good trading off those levels this week. So hopefully you were able to get involved in those. And it looks like there's going to be a lot more to come because the levels and the ranges are holding up quite well. Have a great weekend, everyone, and I look forward to seeing you all next week.